Hi, I'm Calvin Rose, and welcome to Market Minute. The last time I published a Market Minute was about 2 weeks ago on Friday 13th as of the market close. And in the meantime, I decided to take a sorely needed vacation for a couple of weeks. So let's get back into it and talk about what's been happening. A lot has changed since then. If you watched that video, card in the corner up above, you'll remember that we had a big up day, and while it looked like the markets might be trying to rebound, I said it was a little bit too early to celebrate. And here's some clips from that video. What a day today in the markets. I mean, unbelievable. But don't get too excited because I'm not so sure this is going to keep going that way. So what's happened since then? Well, let's take a look at what's been going on in the markets, and you'll see that things are quite a bit different than they were 2 weeks ago. 2 weeks ago, the market risk was at moderate. And I said it was at moderate because the selling pressure was still above the buying pressure, and it wasn't looking like it was going to go the other way anytime soon. Well, if we look at where it is today, equity risk is now at low risk. And why do I say that? And why is it different from 2 weeks ago? Well, let's take a look at the charts. Here's the NASDAQ 100, the Qs as of not last Friday, but 2 Fridays ago, May 13th. And you can see where we were. The selling pressure was still increasing. Yeah, we had a big up day, and the selling pressure dropped a little bit. The buying pressure went up a little bit, but it wasn't enough to call end of the drop. So where are we today, and what's changed since then? So let's take a look at that. So if we look at a chart as of today, you can see really clearly on here. So this is as of the 13th here, and you can see that the selling pressure had been increasing. Yeah, we had a nice up day, but you can see the market not only faltered, but dropped to a new low here. Now, as of the close this past Friday, you can see the selling pressure has dropped a lot, and the buying pressure has moved up, and they've crossed, and the market has risen over the last several sessions. So this is really good. This looks really good. And why am I not willing to make it very low risk? Well, there's just too much going on right now. And in fact, we increased equity exposure in our clients' portfolios, but we didn't fully increase it until we see that there's a little bit less risk in the markets. And oh, by the way, the Fed said that they're going to put the raises in interest rates on hold, so we think that helped things as well. They're finally recognizing that inflation isn't going to be a long-term problem. Here we are with the Dow Jones Industrial Average, and again, back on Friday the 13th, you can see the selling pressure just really spiked here in a huge way. And even though it was an up day, you can see the Dow went up, pulled back, went to a new low, just like the NASDAQ 100, and has been rallying for several days. You can see that the buying pressure has been increasing here, and in fact, it crossed over the selling pressure. So this is, again, a good sign. The S&P 500, same thing. Back on the 13th, the selling pressure was well above the buying pressure, even though we had a big up day here. It tried to rally, pulled back, went to a new low, and has been increasing since then for the most part. And again, this past week, at the end of this past week, the buying pressure increased dramatically above the selling pressure. So hopefully this is all good news for equities and we're out of the woods, but let's see how this next week goes. Now let's take a look at interest rates. So 2 weeks ago, interest rates were at moderate risk. The Fed was hell-bent on tightening. Things weren't looking so stable for interest rates. This week, they've actually moved to low risk. And why do I say that? Well, you can see here, actually back at the beginning of last week, the buying pressure moved above the selling pressure and has stayed there. So that's good. And if this continues, interest rate risk will move to very low. What about gold risk? Well, gold 2 weeks ago was at very high risk, and this week it's at low risk. I'm not going to go jumping back into gold at all, just because I think it's a difficult thing to trade. It's not really correlated to anything. I don't think there's a real risk of big inflation numbers and the Fed raising interest rates a lot more. But you can see here that the buying pressure early last week moved well above the selling pressure, and then has declined more recently. So have to keep an eye on that. But I don't, we're not putting any money in gold right now. And then cryptocurrencies. Boy, an interesting time for cryptocurrencies. You've probably heard me say on previous videos that cryptocurrencies tended to be correlated to tech. Well, that seems to have broken. Tech is doing well now, and cryptocurrency risk this week is still very high. And why do I say this? Well, here we are. Cryptocurrency, you can see that the price has just been in decline. Tried to rally a little bit here, but failed. Went to a new low here. The selling pressure has been well above the buying pressure for quite some time. You see there was some promise here where things kind of jostled back and forth. But what really concerns me with this chart is the long-term 2-month trend for selling pressure is increasing. The shorter 1-month trend, the shorter dashed line, is also increasing for selling pressure. And you can see that the peaks in the selling pressure have progressively gotten larger. This really is not a good look. So we'll have to see how this plays out. But for right now, cryptocurrencies, I would stay away from them. As I've told you time and time again, nobody has a crystal ball, so you have to take all of this with a grain of salt. But I have to say, for equities, things look promising. It's been a long haul. We've had a lot of drops in the market, a lot of angst. So hopefully things will be a little bit better going forward, but we'll just have to wait and see. That's all we have for this week. I'm Calvin Rose, and thank you for watching Market Minute. If you like these videos, please hit the like, subscribe, and notification bell so you won't miss an upcoming episode of Market Minute. That's all for now.